our colleague Mangalam is also now joining in. Mangalam, have we seen 750% jump in quick commerce revenues before?
All right, so here's one thing about quick commerce, and because the reason why this jump has happened is because, remember, between the last time and now, it is a majority domestic owned company, and as a result of which they are owning their inventory. So every time you own your inventory, you make a sale on that, the gross order value gets reflected as a revenue as against the take rate that a company takes, or as against, the sales that they make on this traded basis. So which is what explains this sort of big jump that has taken place. The company had told us earlier as well that they are looking to own their inventory. So it's the third party model which was there, which is now their own inventory model, which is why that big jump that we've seen in the business. What really stands out for me, however, is that, two things. One, every time they're owning the inventory, they will have to deploy more capital, so the working capital increases. But in return for that, they were going to get about 100 basis points more in margins because they were now owning the inventory. So the net operating value growth, or the NOV growth, which is coming right now of 137%, is a more comparable number than the 750% jump that we've seen on a reported basis because of this change in the model. And this is the big positive, 137% growth in the NOV, because the street was working with a number between 120 to 130% as well. So that 137% goes down as a beat. The other thing that goes down as a beat for me is that the food delivery business, which has been growing at around 16 to 18%, this time around has grown at around 20%. So that's a big positive as well, because for 3 quarters in a row, the business was growing at around 16%, and the street thought that's slowing down until the last quarter, where the growth stabilized and the management said that from here on growth will only increase. So that's something we had to look at. That's exactly what has happened. The growth has increased from the previous quarter. They've added 272 new quick commerce stores. That's again something that was expected. 1544 was where they were, and the street was expecting the current quarter's number to be close to around 1750 to around 1800. So all of this works well for me. The reason why the stock may be coming off may be because of some sort of commentary around competition. So that's something I'll be watching out for in the shareholders letter. And that's perhaps the only reason that explains why the stock may be coming off. But, as far as the reported numbers are concerned, when it comes to the food delivery business, the addition of quick commerce stores and the net overall value, or the sales value that have come in from the quick commerce business, the growth of almost the net order value of 137% isn't bad at all. In fact, it's at the higher end of street expectations, if not above that.
Okay. Any reason why the B2B business has seen a sharp fall in terms of revenue? Have you managed to look at that?
I haven't managed to look at that, but for B2B businesses, they did say that a large part of the B2B businesses will be subsumed in the own inventory model, because typically what happens is that quick commerce right now, you are doing a third-party thing. Thereafter, now you own your own inventory, so even the B2B supplies go via that. So a large part of that may perhaps be then taken in the quick commerce business, which is why it may have gone low, but I have to look at more details.
Yeah. By any chance, have they given the like-to-like? As you said, right, the jump in numbers is because of the change.
This is the NOV.
And that's in line with what they've been doing, or even better.
120 to 130% was expected, closer to 130, 135% as well. So this is pretty much in line with expectations, if not beating the expectations.
Okay, so that's the number we need to go by. NOV of around 137% growth this time. Thanks, Mangalam, for that quick take, and we'll probably try and get you back on.
This explains why the food, why the stock has been selling off a little bit, because food delivery NOV has come in at 14% now, which is lower than what the company had done earlier. So they had done 16% earlier. The management said this is stabilizing. Food delivery revenue has increased, but NOV has come down. What this basically means is that their take rate has increased a little bit, and at the same time the discounts have reduced. So which is why we have the NOV, which has grown at only 14%. So here the competitive activity is something that will be eyeing very, very closely, because on the quick commerce end, even as competitive intensity is coming off and the worst of margins is behind them as far as the management commentary is concerned, food delivery, here's a new form of competition coming in from the likes of Rapido, etc. So if they start eating into the company's market share here, then what has been a cash cow for you will start being margin diluted because of the competition that there is. So that's something we'll most definitely watch out for. Food delivery, NOV at 14% is something that may concern the street a little bit, but I'll look into more detail and come back.
Okay, so maybe it means that maybe there's a little bit of competition which is clicking at the heels at this point in time. All right, well, we